Hello everyone, a very good evening to everyone. I hope you all are fine and doing well. So, in today's class, I am back with another chapter that is Unit 2 Liberalized Remittance Scheme and Other Remittance Facilities for the Residents. I hope that I am audible. My screen is visible. Let me check the audibility, then we can start our class. So today we are going to start this LRS, a very important chapter with some questions and numericals. So let's start with the class. Liberalized Remittance Scheme. If I give you the overview of the Liberalized Remittance Scheme, this is implemented by Reserve Bank of India under the FEMA 1999, which allows the resident individuals they can remit up to US dollar 250,000 per financial year, April to March, for various permitted current account and capital account transactions. Right. And here, uh, it is available for the resident individuals, including minors, but not to the entities like corporates or the trust. And what is the annual limit? US dollar 250,000 per individual applies, regardless of the number of transactions, right? So we will learn some more concepts to regarding this chapter. So let's start with the class. LRS. LRS, which allows a resident individual in India to send the money abroad you up to US dollar 250,000 per financial year for the permitted purposes. This limit is overall. It includes all foreign remittances that made in that year. Okay, so means only US dollar 250,000 remittance is allowed. Example, if Mr. A sends US dollar 50,000 for son's education, then it is okay. US dollar 30,000 for travel allowed. US dollar 20,000 for investment in the US shares allowed. So total is US dollar 1 lakh. He can still remit US dollar 1,50,000 more in the same financial year, right? In the same financial year, he can still remit US dollar 1,50,000 uh, to in the same financial year. Got it? Okay. Now, here we can say that that is okay. We know the limit now. That what are the permissible and what are the non-permissible remittances? Permissible versus non-permissible remittances, because all type of remittances are not allowed, right? So in this, we can include the permissible remittances. These come under the Schedule 3rd of the FEMA. Schedule 3rd of the FEMA, right? And in this, we can include education abroad, medical treatment abroad, travel, and maintenance of close relatives abroad. And you can include in this gift, donations, right? These all are the permissible remittances. Purchase of the property abroad, investment in the foreign shares, mutual funds, companies, opening the foreign bank accounts, these all are available. These all are allowed. Mr. B remits US dollar 40,000 to buy an apartment in Dubai. That is permissible. That type of transaction is permissible. Got it? So we can say that what are the permissible and non-permissible remittances? According to the Schedule 3rd of the FEMA, some are the permissible and some are not the permissible. And what are the non-permissible remittances? These are not allowed under the FEMA, such as uh, lottery tickets, sweepstakes, margin trading, remittances to countries which are identified as high risk, prohibited activities under the Indian law. If Mr. C wants to send money and participate in overseas online lottery, that is not allowed under the LRS, and this is non-permissible remittance under the Schedule First of the FEMA. Clear? So, if anybody wants to take the lottery ticket, that is not allowed. FEMA. What is the meaning of FEMA? Foreign Exchange Management Act 1999, which which give direction, which provides guidelines to all the foreign exchange transactions in the India. It replaced FERA because FERA is little bit complicated and strict regulation, and it shifted the focus from criminal punishment to civil compliance. Earlier mistakes were treated like crimes. Now they are treated as violation, but violations with the penalties, right? But now these are treated as violation, but with the penalties. Clear? So here we can say that the FEMA is now giving directions with the civil compliance. So if any person violates any FEMA rule, he may have to pay a penalty, not go to the jail, unless the serious offense is not there, right? And what are the KYC requirements? Before allowing any type of remittance, any type of money sending abroad, the authorized dealers, which we already discussed in the previous class, who have the license from the RBI to deal in the foreign exchange transactions. Now, authorized dealer bank, they have to complete all the KYC of the remitter who is sending money, including minors also. KYC includes identity proof, address proof, PAN card, source of funds declaration. If parents remit money for a child education abroad who is minor, the bank will check parent's PAN card, bank account detail, and from where the income is coming. So these are the KYC requirements under the uh, LRS. Clear? Now, what is the meaning of capital account transaction? Very simple thing. Those transactions who changes the assets and liabilities of the individual in abroad, who alters those transactions, who alters the assets and liabilities outside India of the residents who are in the India, or of the NRIs, uh, assets and liabilities are changed in India. Meaning, if suppose Mr. X is living in, right, and Mr. X assets or liabilities changed in America. So that transaction is capital account transaction. And if any person, Alex, who is living in India and is a citizen of the America, and in India, Alex assets and liabilities are changed. So that is also considered as capital account transaction. Investing in shares of foreign company, that means it creates an asset abroad. Buying property abroad means ownership of property abroad is an asset. So capital account is long-term investment and the asset creation. So we have to keep this thing in mind. Whenever we say what is capital account transaction, that alters or changes the asset and liabilities of an individual outside India and alters the asset and liabilities of the NRIs who are in the India. Clear? That is called capital account transactions. Right? Now, second thing we have current account transaction. What is the meaning of current account transaction? Any transactions other than capital account transaction. Any transaction other than capital account transaction is called current account transaction, which includes trade payment, interest on loans, income from investment, travel, education, medication, gifts, family maintenance expenses, everything. Parent sending money to a child who is studying abroad. That is called current account transaction. Current account transaction, day-to-day expenses and the payment. That is called current account transaction. Clear? Now, I hope that clear what is current account and what is capital account. Now, what are the key sections of FEMA? Important. First one, section 4 is saying if anybody holding the foreign exchange, that is a violation of the FEMA. Resident, they are not allowed to hold any type of foreign currency, securities, or property abroad unless it was acquired while being a non-resident. If someone is in America and uh, it that person is qualifies as NRI for the India, and at that time that person purchased any property or any foreign currency or any security, then it is okay. But apart from this, no residents are allowed to hold foreign currency, foreign security, property abroad. Residents can invest abroad in the property or equity, but they have to follow the guidelines of the RBI and all the LRS rules. That is by the section 4 of the FEMA. What section 6 saying? Only authorized persons are liable to buy or sell the foreign exchange for capital account transaction. Only the authorized persons. Residents, they can't directly trade foreign currency for the purposes. They have to follow and guidelines prescribed by the RBI. Then we have section 10, subsection 6. Foreign exchange purchased for a specific purpose. That means that person have to use the foreign exchange only for that purpose. That does not mean if I purchased foreign exchange just for sending my family in abroad and I invest in some other place. That is not allowed. That is a violation of the FEMA. If foreign exchange is purchased, that must be used only for that purpose. If it is not used within the specified period, used for any other purpose which is not allowed, that all are considered as the contravention of the FEMA. That all are allowed as that all are called as the contravention or violation of the FEMA. Then we have section 11. Powers of the RBI. What RBI can do? RBI can direct the authorized person that you have to follow the rules of the FEMA. Authorized persons have to follow the rules of the FEMA. They can acquire authorized person, submit the information. I need the information. And also penalties is there. If any authorized person is not following the rules and regulations, they have to pay the fine of rupees 10,000 and 2,000 per day if the violation still continues. So RBI also checks all the authorized dealers whether they are following their responsibilities or not, whether they are doing their business, foreign exchange business properly or not. That is basically the section 11 say of the tells about the power of the RBI, right? Then what are the section 13 is saying? Penalties. What are the penalties for the contravention? Authorized dealer fine, we know that. Now, what is the fine of the contravention? If a person violates the FEMA rules, penalties are up to three times the amount involved if the amount is quantifiable. Suppose if any person do a contravention of 2 lakh, 3 times of 2 lakh is 6 lakh. And if amount is not quantifiable, measurable, in that case, 2 lakh is the fine, and continuing violation, additional 5,000 per day. So strict penalties still exist for breaking the FEMA rules. Right? Is that clear? All the rules and regulation. Now, sources of funds declaration. Source of funds declaration means the remitter have to declare that what are the sources of funds. What are the sources of the funds? The bank must be satisfied that the source is genuine. The source is genuine. If Mr. D sends US dollar 1 lakh, he may declare that the source is selling of residential property in India, because bank can ask for the sale deed as well as bank credit entry, right? So banks check that thing, what are the actual source of the funds declaration. Then funds in, funds out monitoring. Funds in, funds out monitoring, that in this bank, authorized dealers bank, they check what are the credit, what are the debit in the account over previous periods. They ensure that there is no suspicious activity. They ensure everything is according to the rules and regulation, and also the most important guidelines, anti-money laundering guidelines. Suppose if suddenly large cash deposits are seen before remittance, so obviously the bank may question why sudden cash? What is the source? And in that case, the remitter have to prove the source of funds, right? Then for high value remittances, banks do a second level check also. This is an additional control just to prevent the misuse. If the threshold is 50 lakh and customer request 80 lakh remittance, the transaction will go through branch check, then compliance on risk team check, right? So bank will ask that what are the actual source, right? Now, here, let's learn about post facto monitoring. Even after the remittance, bank monitor whether the required documents are submitted, whether the regulatory reporting is completed, whether the capital account transactions are properly reported to the RBI. If money is sent for investment abroad, the bank will later check is the APRS is filed annual report, whether investment details are submitted or not. And what is FATF? Financial Action Task Force. It is an international body that fights about for money laundering, that fights for terrorist financing. Countries are rated based on the compliance. If a country is on FATF blacklist, Indian banks will either restrict or closely monitor transactions to that country. And PMLA. Most important thing is here PMLA. What is the meaning of PMLA? Prevention of Money Laundering Act 2002. It aims in preventing money laundering, right? And also it also confiscate the property which are derived from illegal sources, and it is effective from 1st of July 2005. If someone sends money abroad which are generated from illegal activities, it can be investigated, obviously, and also property can be attached by the authorities, right? And who are the close relatives as per the Companies Act? Who are the close relatives as per the Companies Act 2013? So let me tell you about the close relatives. A close relative is member of HUF, husband and wife, um, relations like parents, children, siblings. These all are come under the close relatives definition. Clear? Now, ODI, overseas direct investment. Obviously, if I'm investing in equity capital of a foreign entity, of a foreign country, that is called ODI, right? If an Indian resident buys 20% shares in UK company, this is ODI. What is the meaning of EFC account? EFC is a foreign currency account for the exporters and the persons who are earning the foreign currency, in which they use this account to hold the foreign currency earnings without converting to the INR, right? Without converting to the INR. So here, an exporter receives US dollar 10,000 from a US client and keeps it in the EEFC account. That account is work only for these purposes. Now we have RFC account. What is the meaning of RFC account? It is basically resident foreign currency account. Resident foreign currency account. It This is the account for the returning NRIs who again become Indian or who again become residents again. These uh, used for this is used for holding the foreign currency assets, right? So what is the meaning of APRS? APRS is annual performance report. Annual performance report, right? Annual performance report must be submitted to the RBI bank through the authorized dealer by 31st of December every year 31st of December, right? It reports performance of the overseas entity where the investment is made, It also reports profit, turnover, net worth, everything, right? So that is the meaning of APRS. Is that clear? Now, most important, TCS, new TCS rates are there. If the education purpose is there, if education is financed by loan, then in that case, no TCS will apply. But if medical treatment or education is not financed by loan, then in that case, no tax up to 10 lakh, but exceeding 10 lakh, 5% tax is applied. TCS is applied. Then for other purposes, no tax up to 10 lakh, but above 10 lakh, 20% TCS is applied, right? And in overseas tour package, 5% till 10 lakh and 20% thereafter. And 20% is the maximum rate. These rates are effective from 1st of April 2025. Clear? The numerical questions will be there from only these slides. You can get the numerical questions. Is that clear? If any problem is there, you can ask me. That there is no problem. I think the things are clear. Everything is clear to you. Okay. Now, let's move to the questions where we will do some numericals and some study-based question. Can a resident individual gift foreign currency or foreign securities for the credit of another resident foreign currency account which held abroad under the scheme? Can a resident individual gift the foreign currency for the credit of another resident foreign currency account abroad under the scheme? So the clear answer is there in two words, that is a big no. This is not allowed. Under the LRS, a resident individual, they may remit the funds for the permissible current and capital account transaction, including gifts also. But a resident individual is generally not permitted to hold a foreign currency account abroad, except unless specific RBI permissions are there. Gifts under LRS are typically structured as remittances to non-resident for or for use in India, not to fund another resident overseas account. So such type of gifts are completely not allowed. Next question. In the going abroad for employment, how much foreign exchange can person withdraw per financial year from authorized dealers in the India? Yes, the limit is US dollar 2,50,000. Under the LRS, a person going abroad for employment can take up to US dollar 2,50,000 in one financial year from an authorized dealer bank in India. Right? This limit is same for studying abroad, employment abroad, travel, gifts, maintenance of relatives. So the maximum of US dollar 2,50,000 is allowed here. Next question. What does IFSC stands here? IFSC in financial services. IFSC is International Financial Service Center. What is it? It is a designated area in the India, such as Gift City in the Gujarat, where financial services are provided to non-resident and the overseas market, which is similar to the global financial hubs like Dubai or Singapore. IFSC is a hub where financial services are provided to the non-resident and overseas market. Clear? Then first do this question. Yeah, this is the numerical. Mr. Ajay, who is studying in a university of USA, and he has availed a loan of 10 lakh rupees from a bank. He wants to remit the amount to US for his study. So how much TCS will be paid by him on his transaction if his PAN card and Aadhaar card is available? So if you know the answer, kindly give the answer in the chat box. How much TCS will be deducted here? So what I told you, the answer is here nil. Why nil? Because he availed a loan of 10 lakh rupees when the education is financed by the loan. When the education is financed by the loan, no TCS is applied here. So the answer is nil. We have to write nil, no zero, nil. Next question. Mr. Mohan, who is studying in USA and he has 25 lakh rupees in his saving account. He wants to remit 15 lakh rupees to US for his study. So how much TCS will be paid by him on this transaction? Yes, Shailendra sir, you have to write in that case nil, no zero. If answer is zero, then we have to write zero. But in that condition, nil, no tax is applied. That's why we have to mark the answer nil. So, come 15 lakh up to 15 lakh up to 10 lakh is taxable. Sorry, is exempted. 5 lakh is there. Now on this 5 lakh, we have to apply how much percent? 10, sorry, 5%. Sorry, we have to apply 10% on this 5 lakh, right? 5%. 5% here, and the answer is the 10,000. 5 lakh, sorry, 25,000. Sorry, I confused here. 5% of 5 lakh is 25,000. 10 lakh is exempted up to 10 lakh. The leftover amount is 5% and 5% tax is deducted. That the answer is 25,000 is deducted. Next question. Mrs. Shanti is sick and she wants to visit US for his treatment. She transferred 12 lakh to hospital for his treatment. How much TCS will he paid by her on his transaction? Yeah, 25,000 is correct. What is the answer in that case? Very simple. 10 lakh is exempted. So 2 lakh, we have to deduct 5% on this 2 lakh. The answer is here only 10,000. How much TCS is? 10,000. Great. Next question. Miss Geeta study in a university of USA and she has availed a loan of 12 lakh rupees from a bank. And she wants to remit how much TCS and her PAN card, Aadhaar card is not available. Her PAN card and Aadhaar card is not available. See, LRS for the education purpose, if the amount being is remitted is from education loan obtained from a specified institution, whether the amount is 10 lakh or above 10 lakh. In the case of operative PAN or non-operative PAN, if the PAN card, Aadhaar card is there or not there, still there will be nil taxes there. No TCS will be there because she availed a loan. That's why no TCS is there, right? But if he not availed any type of loan, then 10% tax is deducted. Yeah, nil answer is correct. Next question. Miss Deepthi wants to send money to USA for remittance of her family. She wants to transfer 8 lakh. So obviously 8 lakh and 8 lakh is already below the 10 lakh. So obviously 0 rupees is deducted here. Here we have to write rupees 0, right? 0 rupees is deducted here. And the uh, last question of numerical is here that Mr. X wants to remit US dollar 15,000 for purchasing a property in USA. He therefore requests his bank to remit the amount by debit to his account. And on the date of remittance, the US dollar INR rate are as follows. TT buying rate is given. So what is the amount of TCS that the bank will deduct in order to make the said remittance of US dollar 15,000? See, how to solve this question? See, Mr. S has to make a payment of US dollar 15,000 here, right? Mr. X have to make a payment. So in this case, bank will sell, and what is the applicable TT selling rate will be here 86.55, right? And amount will be there US dollar 15,000 multiply 86.55, which is equals to here rupees 12,98,250, right? Now we have to deduct the tax. How much? 10 lakh. Up to 10 lakh is exempted. So 2,98,250. And on this, we have to apply 20% of tax. And 20% of tax. And how much it is equal to? 59,650. The answer is 59,650. So 20% we have to remit because this is 20% we have to deduct because in this case he's remitting the money. Clear? So what is the minimum maturity period of loan given by resident individual to NRI PIU close relatives? See, under the LRS and the RBI regulation, a resident individual is permitted to grant the loans to the NRIs and PIO's close relative. But such type of loans must be interest free and must have a maturity period of 1 year. The loan should be given by way of cross-border remittance through the banking channel. So the answer is here 1 year. Option B is correct. What does Section 11 of the FEMA Act 1999 empower the RBI to do? Section 11. We already talked about the Section 11. So Section 11 is giving the direction to the authorized person regarding the foreign exchange and the securities. It gives the directions to the authorized person regarding foreign exchange and securities, because under the section 11 of the FEMA 1999, RBI is empowered to issue directions to the authorized persons, like regarding the dealing in foreign exchange or foreign securities. And this is also the main tool for the RBI to regulate foreign exchange operations in the India. So the correct answer is here option C. And what is section 4 of the FEMA Act 1999 primarily concerned with? Holding of foreign exchange by the resident individuals. Means restrictions and permissions regarding the possession, ownership, holding of foreign exchange by the resident individual in India. Section 4 dealing with it. It ensures the resident can hold foreign currency only permitted under FEMA rules, such as through the LRS or other RBI approved channels. Clear? What kind of penalty can RBI impose on authorized persons for non-compliance with its direction under the Section 11? So the answer is here a penalty of up to 10,000, and continuation, if violation is in their continuation, then 2,000 per day. Uh, According to the section 13 of the FEMA, if any authorized person fails to comply with the directions that are issued by the RBI, so RBI can impose penalty of maximum amount 10,000 per violation. Right? Now, what is the penalty imposed on a person? If person do any type of contravention, then in that case, thrice the amount involved in the contravention plus 5,000 per day if the violation continues. In Schedule 1 of the Liberalized Remittance Scheme, which of the following remittances are not permitted? Which of the following remittances are not permitted? See, the answer is here. Which of the correct answer is there? Purchase of the foreign currency convertible issued by the Indian companies abroad. Now, under which schedule of the LRS are remittances subject to approval for the respective government department and ministries? The one and only answer is Schedule 2. Why Schedule 2nd? Because Schedule 1, Schedule 1 permits remittances without prior approval, because limits are mentioned. Subject Schedule 2, it covers the remittances that require prior approval from the RBI or the respective government department ministries. So answer is here Schedule 2, option B is correct. So here now some questions are there. Only 3 to 4 questions are there. In homework, you have to do these questions and kindly do the comment with your answers. right? I hope that LRS important topics are clear to you and the questions are there. I already told you. So if you have any type of issue, you can do comment and ask your problem. Apart from this, we will do complete daily one chapter that will help us in brushing up our concept. Any problem is there, you can do the comment. And if you like this session, kindly give the like, subscribe to the channel, and also do the comment. So thank you so much. Let's meet in our next class with our next chapter at the same time. Till then, take care and have a good day all. Thank you.